All right. Hello, everyone. I hope you've all tuned in. There's a delay. I forget there's a delay. Okay, so we are going to discuss some of the latest videos. If you've been watching, this cost of waiting video was live about a week ago. And there's some very interesting data in there talking about the 2015 to 2025 difference in prices by neighborhood. So I broke down a few, and then the video just last night, we broke down all the different areas and ranked them. So we're going to show you the cost of waiting spreadsheet tool a little bit. We're going to talk about the market, talk about interest rates. And so we're going to dig into that. So if you've got any questions, please do go ahead and post them in the chat and we will watch that. And in the meantime, we're going to go ahead and share what we have for this data for you to see. Okay.
Perfect. And before we go into, I know our viewers know us better than us.
Introduce ourselves. Good idea. Good idea.
Yeah. So yeah, with you.
Okay, so I'm Theresa Wellman. I've been a real estate agent here in San Jose area for 21 years, and I have an engineering background. So I like data. We're going to dig into data today and talk actual numbers.
Yeah, about me, you have seen me multiple times. I'm Amitava. I'm a lender in Bay Area, NMLS ID 1685660. And one thing common about me, we love data. Being an engineering background, that's our passion. We talk about data, market stats, how the market is doing. And I believe whenever we discuss about anything, our main focus is for our data-driven community. And in Bay Area, when we talk about anything data, we know majority of our clients are in tech sector.
Yeah.
They're heavily relying on data, and believe me, anything can speak wrong, but not data. So
Yeah.
let's deep dive. And today we have a unique and I would say very interesting topic that we would love to talk about. And believe me, when you and me initially like brainstorming this data, especially that we are talking today, we are creating suspense for sure. But believe me, when I go through the data and I said, wow, cost of waiting versus cost of buying now, that our main agenda and topic today. So let's go for it.
Yeah, so we're referring to these last couple videos that were posted on the YouTube channel, and we're going to show you some of that data and talk through it. So this calculator is one of the tools that we've been working on to help buyers understand the market. So we're going to run through a couple different scenarios. We'll look at 2.3 million in Almaden Valley. That median was actually 2.4 last month, but let's say you buy a little bit under the median. And we're assuming you're paying currently $3,500 a month in rent. That maybe you can still save $2,000 a month, and you're putting 20% down payment with a 5.75% interest rate today, which is probably an ARM, right?
I would say definitely that's a little high of the interest rate we have taken considering different parameters.
Okay.
Today, on my end, I have seen the base rate has gone down to 5.25%. But again, with all kind of a possible scenario, if we take a higher interest rate, still it will give you a kind of age for understanding.
Yeah.
Because we have seen last almost 3 weeks, like 10 years treasury had softened down a bit. That's why interest rates are definitely going down. So very good news that affordability index has increasing. Also, it's an alarming time that, hey, do not wait on the sideline just to wait for more price cut to happen. Please dive in and understand this nuances, this numbers. And we will deep dive and discuss more about it.
Yeah. So, I mean, the beauty of this spreadsheet is there's a link in our in the video to be able to get access to this, but you can play with the interest rate and you can see the difference. That's the cool thing. So if you buy now, your numbers basically work out for your total monthly housing cost about $13,834 with 20% down on a $2.3 million house. And if you wait 6 months, the prices are going up. So this is taking into account this data that we crunched, assuming a certain percentage return or appreciation by area. So when you select the neighborhood, it's going to put in that math from the last 10 years and actually work out the numbers for you. So the price is going to go up of the house, which means your down payment is going to go up because that's still 20% down. Your loan amount will go up. And so you've got PITI and your insurance and property taxes every month, all of that added up. But you'll be paying rent if you're waiting 6 months, right? And that means you're actually probably, in this case, losing $87,000 by waiting. Crazy enough. That's a really huge number. If you wait a year, 177,000, and 2 years, 362,000 for that $2.3 million Almaden Valley home. And if we,
and sorry to interrupt you in between, but if you just started, like when you started talking in this one, we know the average median price was just like a couple of months back is 2.4 million. We are using a very kind of a compromised data set by saying still you get an undercut house. That means after 6 months, it may happen if there is like aggressive interest rate cut, this savings can be much more higher. It may happen that the median price can sharply rise up to $2.5 million. So that way, definitely you are losing more on table by waiting down the line, maybe for 6 months, maybe for an year. And we have seen the same trend in 2021, how significantly the prices shoot up like a star.
Yeah, so it's not, I mean, this is assuming a 10-year, average essentially month by month. But to your point, the market actually, especially in Almaden Valley, really takes off this time of year and then will settle usually over the summer. So it's going to ramp up faster in the next few months if you wait, which is not taken into account into this mathematical model. But yes, waiting's going to cost you. So what if we play a different scenario and we say Blossom Valley, and let's go with the average price of 1.5, about, I think it's actually maybe a little bit higher than that, but we'll still say you're paying $2,500 a month and you can still save $2,000. Your 20% down would be a little bit less of 300,000. But if we look at the actual baseline numbers here, it's 77,152. It's very similar, which is funny, right? It's just a little bit less because Blossom Valley is actually appreciating over the last 10 years more in a percentage wise than Almaden Valley did, if you watched any of those videos. So really interesting data and numbers to compare, really.
Yeah, why would you show that entire last 10 years, especially different pockets in Bay Area that people are trying to buy it out? Yes, this
so
we are creating this data for our presentation to our viewers to make sure you have an understanding that how the market dynamics are moving. And when you see that is the most important part, monthly appreciation.
Yeah, this one way over here.
That's phenomenal.
Yes, yes. So I know if you're renting and you're looking to buy a home, the payment seems huge, but when you break down how much monthly you're appreciating in value, wow, the numbers work out. So I do run through that in the cost of waiting. But look at this. Cupertino over the last 10 years, $13,750 a month over 10 years. That's just phenomenal, right?
And if you think in a different way, that for a $1.8 million, you are just putting a 20% down. That means your investment, technically looking at it as a 20% investment. And how much you're kind of getting per month? $13,750. And that is mind-boggling.
Yes.
Any kind of investment, traditional investment, like going for any like high yield savings or anywhere you go, park your 20% down without taking any risk, you never will get close to this. That's what my leverage. That means you are taking a retirement kind of a growth from day one when you buy this house rather than wait.
Yep. Yeah, absolutely. The numbers are just mind-boggling. And then you take into the actual investment perspective, it's even more drastic. So you'll see here, this is ranked by the total appreciation gain by dollars. But you'll see percentage gains. The video I just posted last night actually ranks the neighborhoods by percentage as well. You'll see this one right here, Blossom Valley was our superstar at 103% over the last 10 years. But some of these, started out at really high price points like Cupertino. Even though it only appreciated 91%, it was $1.65 million, which is how you break down that monthly appreciation. So all of these areas, no matter where you got into, now these are single family homes, appreciated a lot, like $4,000 a month or more for a really, smaller, older home in Alum Rock. That's pretty amazing. And I do have condo and townhome data, as well as further out areas. That's going to be my next week video where we break down some of this condo, townhome, or if you're willing to commute, what does it look like? Information. And you will see condos appreciated $1,900 a month. So it's less, but still the entry price point and the leverage you're talking about is still really phenomenal. Townhomes, $4,500 a month, and Morgan Hill and Gilroy, really respectable numbers, better than some of the areas in San Jose. So that is absolutely worth considering if you work in South San Jose or able to do the commute, or maybe you work down there, even better, right? But pretty amazing to see the impact of Silicon Valley on our real estate prices and what the appreciation has done over those last 10 years.
Yeah, and this reminds me of a very common topic. Like when I had a multiple scenario that clients get into an offer stage and they said, hey, I'm putting an offer at 1.9 million, and now I'm about to get a counter offer for 1.95 million.
Yeah.
Okay, so just a 50,000 delta. Then, as you can see on this chart, daily appreciation, same way I will tell them, what is your daily expenses?
Yeah.
$50,000.
This is so good to use.
This is so good to use that
Yeah.
you can remember, just again, I'm telling, for a $2 million purchase, if you are putting a 20% down, that is a 400,000, you are doing your investment. But that appreciation per month is phenomenal, around $500 per day. You are getting it back on your kitty.
Yeah.
And I understand on top of that, there might be some tax implication and things, but still, this is a low risk gain you are substantially getting from day one.
Yes.
Because most of the people are risk adverse.
Yep.
Because they know, like in Bay Area, not in Bay Area as a whole, but everywhere, the economy that we are seeing for last almost a month now. If you let me allow to discuss with them that on 28th and 29th of January, that entire market has seen a kind of brutal shift. Like on 28th of January, in a matter of 60 minutes, $3.7 trillion of gold and silver has been liquidated.
Because the rates were so high, or the prices were so high. Yeah.
We all know, like whenever we talk about gold, they are called a gold-backed security. Every time you go back in 1933, 34, Great Depression, that point of time, gold is being considered to be a standard where everything has been backed by that. So what it happened like in those times that prices are crashing. After that, we have seen crypto markets shown a drastic like down. For an example, October last year, Bitcoin 126,000. Then this year, recently, it's fall down to 60,000, close to 60, 61,000, like a 50% cut. So I saw a phenomenal video, like when it was 126,000, everyone is buying Bitcoin. There is a comic video, but when there's a 50% reduction, there's no one to buy it. So basically, it gives us a kind of, I would say, checklist that why not you invest now in a much more steady fashion, I would say not a risk adverse way, but in a such a way that you will protect your asset.
Yes. Yes, absolutely. So this data can be used so many different ways and so many different perspectives. Absolutely. Which is why I got so excited and started to really crunch some of these numbers. It was really inspired by when I looked at the delta of like $1 million in Amitava Valley. I was like, how much is that a month? And it started to get me to crunch all these numbers. So then, of course, we had to expand that to look at all the different areas and look at Amitava Valley's kind of in the middle with $1 million, Mountain View in the middle with $1 million. Plenty of areas above that. For just owning a home, doing nothing to it, you gained $1 million.
And on top of that, right now, the exploding kind of population is slowly coming in. Like the new, like people are coming in, new generations are moving from out. Like recently, I see another like economic stats data. Last almost 5 years, especially in California, the population increase is significant. Like people are coming due to the opportunity of jobs. Especially the tech sector jobs are the best out here. Still, people are fresh out of graduates in different states. People are coming from different countries. They mostly go to different areas in the United States because of the cost. They're going to middle, they're going to East Coast, they complete their study, and they're coming and joining the workforce in the area. And that clearly shows that these are very conservative pattern because 2015 versus 2025 appreciation data, I would say 2015 till 2018 is a very moderate appreciation. But after COVID, the appreciation is huge. And that is going to happen due to the census report data and may happen in 2030 from now. This appreciation would be double figure even that we are discussing today. Yeah.
So I'm just pulling up my website here where we've got, the prices over time so you can kind of see, right? So here's what he was talking about where the orange and blue are prices, one's average, one's median. It was kind of, met from 17, 18, 19, almost flat, right? And then here's the pandemic.
Yep.
Huge increase in prices. So, and then interest rates went up and prices settled, right? So we see this up and down. But if we look at real estate being a long-term asset, which it should be, then, the trajectory is obviously really huge. And even if you bought here and waited 10 years, I have a video on that. Actually, if you waited 7 years, you still made money, still recovered after that huge Great Recession that we had in 2008. So really interesting to see the trajectory here, and Silicon Valley as a place for jobs has just continued to grow and grow, fueling this demand that we see here. And as we all know, we're pretty landlocked by geography, so we can't continue to build other than condos and townhomes.
Right. And Teresa, believe me, whenever I see the same chart times and times again, it reminds me of one simple fact that whatever the market is doing, maybe a Great Depression, maybe a recession, or any kind of pressure, negative pressure, I would say, in the market, always there's a rebound fashion. Market rebound more strongly than ever. The only reason in Bay Area is demand versus supply. That I talk to all my clients, in our common discussion that we had.
Yeah.
That in Bay Area, demand is always higher than the supply. We see that housing shortage is there. New constructions are coming in, but that is not adequate to eat up all the demands. And on top of that, this is the only pocket, I would say, in the United States. Constantly new innovations are coming, tech sector wise, new thoughts are coming, companies are getting into IPO. We have seen there are so many, and due to the legislational changes that are on the board, like cryptos and others, I believe definitely lot more to come.
Yes. And I do want to point out on this chart, you see the number is down. This is January close data, which is homes that sold in December. We have seen the current market take off again. So those pending sales, or the ones that closed in February that are just hitting, are on a whole different trajectory than this. So that's why we wanted to do this. We want to take your questions on the current market. Please drop them in the chat and just let you know what we're seeing out in the field. We're actually both going to be at an open house this weekend. And we'll have really good information of what buyers are seeing, what's going on, the questions being asked, and the activity. I can already tell you it's a beautiful single level home in Evergreen, and the activity has been absolutely insane already. Yeah.
And people have understood this very easily. The moment this February close data would be available, I would say middle of March. Again, this would be a mind-boggling data and stats, because last almost a month, purchase application itself increased by 18.7%.
Yeah, buyer demand. Woo!
Buyer demands. Everyone who are waiting on the sideline, they are active. People who refine, like people who close their houses almost a year back, they're refinancing right now because the 10-year treasury dropped. So everyone is interested to take a buy of it. So if you are still waiting, I would only say that make into a consultation. We love the data-driven approach. You need someone who can back you and understand your financial nuances, strategize it in such a way that you are in a winning side of the game. Not today. I would always say this is a wealth building exercise down the line. Whatever you are putting the seed on the ground, it would be a fruit tree, maybe 5 to 10 years down the line. So your financial wealth building is in your hand. We are just the levers. I would say we are the levers to help you in succeeding in this pattern. And still the chart, I believe it's still you're sharing the chart, and that's clearly showing that month over month, year over year appreciation is there.
Yeah. So I did just stop sharing the chart, but I can bring the chart back up so you guys can see the some of the numbers here. This is just the data from the very first video I did by area. So we just looked at Almaden, Cambrian, Willow Glen, Campbell, and Cupertino. You can see the prices up year by year, just up and up and up. And of course, there was a couple years in there. So 2023 was a little soft. Some of the areas stabilized or even dropped a tad, but overall, the appreciation in those 10 years has been phenomenal.
And even those years, if you scroll down a little bit on that same one you discussed, like for an example, in Campbell, if you see the two bars in 2023, they're neck to neck.
Yeah.
It's not too much of a dip. So this exactly those tall pillars or tall buildings, it is not hugely drop. It is a significant, I won't say it's a significant correction.
Yeah.
It's a little kind of a maneuver in the market.
Mm-hmm.
But if you see the buildings, this had a pattern. It's going down.
Yeah.
And again, the rebound correction that I always say to my clientele that I work with, the rebound correction, especially in Bay Area, is so significant.
Yeah.
Because this is an area where every buyers, mostly their buying capacity depends on their stock market activity.
Yep.
If the stock market is strong, definitely there are more buyer sentiment.
Yeah.
And they get into the market and make sure that leverage, they take out the leverage from it.
Yeah, absolutely. So, okay, well, perfect. I mean, we've got a lot of great data here for, we'd love to hear any questions or any chats. So please do jump in with any questions. And in the meantime, I think we're going to go ahead and you want to share your slide?
Yeah, why on?
Yeah. Okay, so we will bring up another screen here to share. And this then can be, whoa, okay, that was weird. All right, so here we've got some information that you want to share.
Correct. And
about
the
Realtor?
same kind of data that you presented, I just minced that data with a real life kind of a scenario or story, that when we wait until the rate drops, that's the most common narrative, that should I wait more? That rate drop, I have more buying opportunity. Yes, that's one way true, but not always the case. The moment the rate will drop, then immediately there are more competitions. For an example, you're planning to buy the house at $2 million. And it has happened many a times, my friends. I have clients who decided to buy a house around 1.8 in a neighborhood like I would say in Willow Glen area. They end up paying like 2.4 in a matter of within 2 years. And that's brutal.
Yeah.
Like within 2 years, you are paying 600,000 more because you need a desired home. And this data clearly shows that appreciation that me and Theresa already discussed, and annual appreciation, your percentage of gain that you are getting. And this is an eye opener that should we really wait, or let's buy the right home right now with a strategized plan. You make sure that you are hold your hands by a team, that we have a plan for you. We'll make sure we calculate all your monthly expenditure. And then we will fit your bucket in such a way that it would be a fast, clean underwriting from that day one. And we all understand in Bay Area, people are interested because most of their money are packaged into a stock portfolio. And in last almost a month, stock is definitely doing all kind of funky patterns, ups and downs are going. But recently in last 1 week, most of the major tech companies have their financial Q1 data already. Their financial data are being processed. I would say the trajectory for the economic data, employment data, that is also showing a promise. So being all the thing aligned, I would always say that what you actually work on your profile, especially a financial profile, that is not for your immediate 1 year gain. That has to be for next 5 years, long-term planning for financial wealth building. And that's why your offer, whatever offer you are preparing, that offer has to be aligned with your communication. Yeah. That has to be in a way that you understand what would be your final goal has to be. It's not like buying a home, rather buying a home for financial wealth building down the line. Yes.
It's well, and buying a home for the security of your family, right? And not having to move or worry rent goes up. But it also here is a huge financial wealth building tool as well.
And we can certainly help, as I mentioned on my slides, that if your input is just like neighborhood plus your targeted price plus your down payment, then definitely our output would be a 3 scenario payment model system. We can show you how the cost of waiting will work and how offer ready letter we can prepare, exactly offer ready letter we can do, and make sure in the post closing plan what are the different refinance triggering options we can offer you. And those are important because that will help you in a cash flow positioning and optimization. The moment you get to a close, people sometimes ask me a question that, hey, Amit, like how interest rate is important in the purchase journey. I would say it is important, but not everything. There are so many nuances. Why won't we talk about our recent experience with a condo transaction?
Oh, yes.
Right.
Yeah. I mean, yeah, long story short is something happened during escrow and we represented the buyer and the seller was not able to bring the property back to the same condition. We thought we would give them a little time. We had a rate lock we had to worry about, but there was absolute strategizing between us to figure out the best scenario for this client to get him,
Right.
through the finish line. Yeah.
100%. And that's what I always talk about, that you need to have your team that will weight all these options, not at the 11th hour, but at the beginning. That's why cost of waiting versus buying is very important.
Yeah.
And we are there to help you. Interest rate is not everything. You need to have your own team on your side who understand that financial nuances very clearly. Make sure they position you for long-term wealth building rather than a short time, like just to get you pushed to the door.
Yeah.
And that is not something you want. Believe me, I have clients who came to me by closing transaction with a different set of team and say, Amit, we feel really kind of empowered with knowledge when they worked with us as a team and understand all the small like rules of the game.
Yeah. And I mean, even I find another one that really matters is appraisal and strategies, right? Like right now, when the prices are really taking off again, there's concerns and conversations around appraisal gaps. So what is your scenario? This is where your lending and your realtor team work together to really help you make a financial decision to minimize your risk and have plan A, B, C, whatever is needed to be able to make that work. And
100%.
just a random, bank that you bank at isn't going to be able to help with that level of detail.
Most of the time, if you ask your preferred lender that you're working with how appraisal rebuttal or challenge work, I can certain that most of them will give you a vague answer. Okay, we'll take care of it. But believe me or not, being an engineering background that we are sitting here, it's purely a data-driven statistical model.
Yep.
It's not going out of anything. If in our viewership, any one of you already bought or like refinanced a home, you have seen multiple times our appraisal report. That appraisal report, if you see, there is some structured data. There's some structure adjustment based on the comparable sales. That's why I said it is purely backed by statistical inputs. That doesn't just like a fluke. So if we need to do an appraisal rebuttal, there is a process. And that's why experience should come to the board. Sometimes we would plan to do a board just purely appraisal rebuttal, one of our discussion.
Yeah.
Just to give them more idea.
But I mean, I have strategies before we even get there. So we want to avoid the rebuttal if we can help it, right?
100%.
So, I mean, I'll talk to my clients about how to get through that appraisal and get the appraiser to understand all of the factors, right? And then hopefully they can incorporate that. Then if that doesn't work, we go to the rebuttal, right? Which is important, but I've only actually had to do a rebuttal twice in my career because I prepare for the appraisal.
See, 22, 23 years of journey in this pattern and you only face twice.
Yeah.
And that only happens, I would say, when your initial planning is not accurate.
Yes. Yes.
And that's why you need to be proactively finding out who would be your team. And that's why interest rate is not everything. Interest rate, one of the important parameters. You can always refinance, always you need to find out different options to leverage it out. But finding a good team who can help you in that wealth building process, putting you in the right positioning in this changing market, that I will re-emphasize again, changing market. Right now, so much is happening in this economy.
Yes, yes, absolutely. So we have like 1 or 2 minutes. We can take any last questions. Feel free to post them in the chat. If not, comment on this video and I'll get back to you. Or if I need some lending assistance, I will reach out to Amit and we will get an answer back to you. If you want to come chat with us in person this weekend, you can do that, right? Saturday will be in Evergreen. Feel free to reach out. Our contact information is below. And we'd be happy to share any details if you want to meet us and have more of a discussion one-on-one or come through the open house. Yeah.
Perfect. Do you have any question on our text?
No questions posted, so not at the moment. So we will finish up. We've got quite a few people watching, but no questions.
Perfect.
Just listening.
100%. We are always there to help.
Yeah.
Anytime you need any help, as Theresa mentioned, we are there. We need to make sure it's a team that we are helping you. It's not like you need to take your decision right away after talking to us. It's completely no obligation. We want to make sure as a community partners, it's our responsibility to share our knowledge. Whatever we gain through our journey, constantly evolving. This market is constantly evolving.
Absolutely.
And that's why we like data. We churn through data. We create a data-driven model just to make sure we learn first. And we want to share our learning with our buyers. We share our learning with our sellers. And that way, it's a consultative process that we are helping our economy to grow through our learning model.
Yes.
So again, Amitava signing off here. If you need to reach out, my number is 650-521-6277.
And it's in the description as well.
Perfect.
Yep.
Theresa?
And Theresa, yeah, my number 408-669-4908. Feel free to call or text that number. There's also links below just to book some time for a phone call or a Zoom. So we would love to help you on this journey of learning more about this exciting, interesting San Jose Bay Area real estate market. So we look forward to talking to you in the future. And if you'd like to see these discussions continue on, say, a quarterly basis or something, please do let us know in the comments below. We would love to hear from you.
100%. And based on your, even you have some recommendation, some topic, please suggest us. We'll love to do our own research backed by data and present something that is more helpful for our viewers.
Yep, absolutely. All right.
Okay.
Signing off. Have a great day
Thank
and
you.
happy
Bye.
weekend.
Bye.
All right. It's weird when there's a delay. So yeah, I mean, we had people